Okay, I think we're good to go. So today we are pleased to have a panel discussion organized by Vortexa, adopting freight analytics for a winning age. Vortexa's data analytics platform tracks more than $1.8 trillion of waterborne energy flows around the world in real time. This panel will dive into leading trade and risk indicators in dynamic shipping markets and how we can use analytics and real-time data to make stronger trading decisions. I will now pass my time over to the moderator of this session, Vortexa's lead freight analyst, Arthur. Arthur, please.
Thank you, Yueling, for the introduction. Good morning and good afternoon, everyone, depending on where you are joining us from. Let me share my screen first of all. Going to find our slides here. There we are. I hope everyone can see. As Yueling just shared, my name is Arthur, and I'm thrilled to be moderating our very own Vortexa panel here today, entitled Adopting Freight Analytics for a Winning Edge. Joining me today are three high-caliber speakers, well-known throughout the industry, which I'm going to let introduce themselves and their company. Henry, would you like to start? I think you may be on mute there.
Schoolboy error. I run the research group at Braemar ACM Shipbrokers. So we're number 2, I suppose, globally in terms of size. And we have a research group that runs out of London, Singapore, Australia. And we do a lot of work with freight analytics, particularly medium-term outlooks.
Thank you, Henry. Morten, over to you.
Hi, my name is Morten Aarup. I head up market research in DS Norden, covering both dry cargo and tankers. At any given point in time, we have around 400 dry cargo vessels in commercial control and 100 mid-size tankers. Yep.
Thank you, Morten. Last but not least, Ron.
Hi, good morning, afternoon, wherever you are. I'm Ron Crean, so I'm Commercial VP at Windward. Windward is an AI and predictive analytics company. I'm in London, but we've got a large team of data scientists in Tel Aviv and in Washington as well. And I lead the maritime insurance, global energy and supply chain part of our business. So good to be here.
Thank you all, great to have you. Now, before we dive into the first of 4 questions for this panel, let's provide a bit of context. Making data-driven decisions is nothing new in the energy and freight industries. Now, what is new though, is the development of technology over the last couple of years and the emergence of companies such as Vortexa that are able to harness insights from really the troves of data available. The development of companies such as Windward as well, to be able to tackle things like maritime risk using that data. And more importantly, the fact that the largest players in the industry, such as Braemar and Norden respectively, are really integrating freight analytics within their workflows in order to keep that competitive edge which they had and gain even more market share. So without further ado, here is my first question for the panel today. Which market participants benefit most from increased use of data analytics within shipping? I'm going to start with you, Henry, on the spot.
I suppose the first thing to point out is that data analytics, or the availability of data, has already dramatically changed the landscape of certainly the oil business. So the sort of margins available, traditional margins available for oil traders have changed quite dramatically, as what was privileged information that was owned really by a handful of large companies who had access to information on refineries, on big maritime fleets, who had port agency links. They were able to trade on that asymmetry of information that that now is pretty much universally available for subscription. Obviously, the quality varies from provider to provider. So I suppose that's the first thing to point out, that the old-fashioned trader who relied on sort of insider information or certainly privilege information, that business has died. And now more and more, the margins on the oil side for trades are dictated by the freight. And so it's certainly interesting how this data availability has brought freight back into the sort of the forefront of an oil trader's mind. Now, who benefits from it, I suppose, really depends on that asymmetry. So for a while charterers had access to this data, they were able to use that as a stick to beat up the owner with, effectively, to say, look, there's over capacity in the market. I can see it on my screen, and the owner says, okay, if that's what you say, that's what you say. Now, of course, the owner has it as well. So now there's symmetry. You can't have that same sort of power where one large player has power over small players. So a lot of the small players are now much more competitive as a result of that data. Shipbrokers certainly benefit from this data, and we benefit from it in two ways. One, we're much more able to advise current market activity. So obviously we can see where these ships are. We can advise charterers where, who's chartered vessels out of a certain port in the past. Much better real-time information. From our perspective on the research side, we use it to feed our assumptions. So there's a lot of guesswork going on. There's a lot of ideology in terms of market forecasting that now we can't do. We can't do because we've got the data in front of us. Now we're able to say it didn't move because of X, because I can see on my screen all the factors that were moving it. Now, does that make us better forecasters? Probably not. Probably more difficult to forecast, and certainly more difficult to influence people because of the complexity of the situation. What it does allow us to do is to challenge simplistic forecasts and to say, and that's one of the reasons we've put so much effort into understanding how AIS works, and also the limitations of AIS, is to challenge simplistic forecasts and say, no, this isn't about supply and demand, ships in, ships out. This is about contango forward structure. This is about it's stuff that you cannot possibly put in a model. So it's made our jobs much more difficult in terms of advising clients, what to do, because it used to be. I mean, I can think of the 4 or 5 times I've been sort of spot on a forecast. It's generally been good fortune or access to that privileged information that now everybody has. So again, whether brokers have benefited from it or not is difficult to tell. But I think generally speaking, the bar's been raised. You have to be fully conversant in data analytics in order to be able to advise your clients.
Absolutely. It is part of a wider ecosystem that you need to implement within your company. And I'm going to pick up on 2 things you said. One is that it's leveling the playing field, but at the same time, that is from a situation where the large market participants had the access to more information back in the day. But when we discussed this question with Morten, and I'm going to pass along to you, your answer was that it was the bigger market participants that would benefit.
Yeah, and I would fully agree with Henry that we used to be in a position where the big shipping companies had some privileged information or some advantage over the small shipping companies. Forget the oil traders, we've always been behind those. But if we're just talking within the shipping companies, we used to have more privileged information than we do today because everybody can see what's going on. Having said that, using the data has turned out to be quite a challenge. It requires a good data infrastructure internally. It requires quite a bit of capital. All these new data sources are not necessarily cheap. And then it takes a fairly strong organization that's able to take all this information and implement it into decisions. So just seeing the data is really not a minor thing, but it's only the start. Getting the data in front of the people who have to take the decisions and presenting it in a way they can use it is certainly a pretty big job. And I do not think that all the minor shipping companies necessarily will have the resources to go into this as full-heartedly, perhaps as some of the rest of us. The IT department becomes fairly important fairly fast. The data scientists and all that, absolutely. But the whole data infrastructure is has become a big part of our both budgets and time consumption.
Exactly. So it's not just about the inputs, because that raw data at the end of the day is nothing new. It's nothing that was really unknown to the industry, but it's really how it becomes an output which decision makers can use in order to support their decision. And Ron, over to you now. We also talked about recently about how it was a good starting point, but it wasn't necessarily the end point to have that data.
Yeah, absolutely. I think certainly from what I've seen in the last 16, 20 years in this space, I think commodity traders are the ones they've really pushed for better context. And I think that's what it's all about. You know, increased data is literally about building better context. And I think kind of follows on from, I guess, what, you know, the other panelists said as well. It's about how do you use it to make better decisions quicker? You know, when you ask about increased use of data, I remember sort of speaking about this years ago, you know, right at the very start of AIS in 2004, and people like Bloomberg and Reuters really understood it early on, even though it wasn't a global data set at the time, and it tapered over time, so it got better over the years. Now it's great, but obviously it's one of those things that needs to be almost reinvented every year. I mean, you know, we've seen price and ship movement data being fused for years, and you know, some basic prediction on that. But I think the next generation of development is going to be around the behavior of ships, and you know, the insight that can be gained from that in real time. I think that's the next big push. Certainly what I'm seeing now. I think more data as a question, you know, in and of itself is almost like focusing on the power drill when what you really want is a hole. I think it's about being crystal clear about the outcome that you're trying to get to, and then really push for that.
That's a great answer that transitions well into our second question, which is, does greater transparency through the harnessing of the power of data lead to greater efficiency? I'll start with you, Morten, as I remember you saying that it was really that drive towards efficiency, more specifically fuel efficiency, which had really driven that digitalization of the industry.
Yeah, at least I can speak for Norden, but also I think other big shipping companies, where data made it really its first strong push in shipping was in fuel efficiency. When we came out of the big crisis 10 years ago, we were all discussing slow steaming, and then during a couple of years we figured out it's not slow steaming, it's right steaming. So it's finding the right speed at the right time, and that has turned out to be a big science with a lot of data, and we built our data department basically on the foundation of fuel efficiency, and everything else we're doing is kind of built on top of that, all the specialists and all the data infrastructure. So that's really where efficiency came in first for us. I think if we're talking market efficiency, it's something different. I guess we can all think about, we look at this map and see, oh, there's no ships over there, so let's go over there. I'm not 100% convinced yet that will lead to higher market efficiency in shipping. We are fast getting into a game or a game theory situation where we're more discussing what are the others looking at on this screen, where will then they go, and then we will have to consider, will we then do the opposite? And that is that's going to be interesting, and it already is in some markets where we actually take decisions, not necessarily going where it's empty, because we know everybody else will be doing the same. And that's the fascinating part, and that's back to where I'm saying that data is one thing, but knowing how to get it into the decisions is really the big issue.
So it goes back to kind of what we were saying about the access to information in the first question, where now not only are we looking at the fact that you have access to that information, but you need to consider that the other players in the market might have access to it as well.
Yeah.
What is your take, Henry, on the ability to harness the power of that data to lead to greater transparency and to greater efficiency?
Well, I mean, from a shipbroker's perspective, I mean, it makes us more efficient. Certainly, we can do the sort of roles that we used to play, advising clients. We can do in the fraction of the time, but I can't say that's a great efficiency. In terms of our side of the fence, so more on the forecasting side, it's a heck of a lot more complicated. So the models have become that much bigger. Someone described it to me as a multi-headed hydra that constantly needs feeding. I mean, that's certainly true. There's a lot of inputs now, but even there, the danger is over reliance on this data. I mean, it's getting better, but still the market often moves on stuff that's invisible to these data models or invisible to the algorithms. There's a lot of sort of off-market trade that in some regions does tend to affect supply and demand that is unseen. But of course, then the big movers in this market are almost invariably things that you won't have been able to have any forward sight on at all. There's nothing data can tell you about sanctions on Iranian fleets or Venezuelan fleets or I mean, hurricanes. I suppose you can say something about, but a lot of one would expect the natural evolution of transparency of data is a reduction in volatility. Nothing of the sort. I mean, we've had the most volatile freight market in the last year that we've almost ever seen. So that side of the proof, if it were more efficient, is that the volatility wouldn't be there. Every time there was a gap in the market, someone would move in to fill it because they have a forward view on it. That's not happening.
What about you, Ron? What are your thoughts?
Well, actually, if I take Henry's example of sanctions compliance and use that as an example of efficiency, because it has the potential to be an enormous time waster, because it's opaque and it's messy and it's I think in the last 18 months there's been 4 advisories from OFAC, for example. So in that time, which obviously affects commodity traders, ship owners, everybody else in the market. And just as a live example, in the last few days, we were talking to a couple of different very large energy businesses. We just looked at, what have they done over the last few months since they started screening things in a different way. And let's say they screen 1,000 ships a month. With a traditional approach, which is obviously what most companies still do, they basically waste about 270 working days a year across a team, in a typical team of about 10 people. 270 days a year is quite a lot when you multiply it across an industry. Essentially chasing false positives, which is a nightmare in this, in this market, because nobody's got time to do that. But weirdly, that's what the market's set up to do. So that's been one of the most obvious efficiency gains, I think. I can think of lots, but let's use that one as an example.
We're going to move into the third question, which I think you started answering there, but specifically when it comes to maritime risk, as the needs for compliance are over increasing, and if you're not careful, the cost could be ever increasing as well, especially for ship owners. I'm going to stay with you, Ron, in order to answer first. How is maritime risk better understood and addressed thanks to technology?
I think this year has been quite interesting from a innovation acceleration point of view, right? Because trying to figure out how do you keep the wheels turning globally. All of the companies we work with are complicated beasts, right? So You know, they've lots of moving parts, and the approach to risk needs to change, right? So I think most of the companies I've spoken to in the last year, including ours, you know, we've had to collapse our sort of cycle plans for innovation into almost instantly, because things that we had on the you know, in the path for the next few months, we had to make them happen immediately, because we had global energy companies who needed to be onboarded immediately and had an expectation that they're up and running the next day. And that's quite a big ask, but we did it, and so did they. I think there's a couple of strands to it that I think are interesting. In the last few months during COVID times, you know, in the absence of physical inspections on ships, having to build a completely different view, a dynamic view of risk, has been quite interesting. You know, how do you vet ships in a different way? You know, so we've done that. I think that's been really interesting. But I think it's going to be interesting in the next few months to see, given that everything is still working now, you know, all of the companies we're working with are still operating at a high level, you know, despite everything that's happened in the last few months. It'll be interesting to see what the spillover effects of that into next year are.
And Morten, for Norden, you mentioned fuel efficiency was really that first drive that led you to really invest in the digitalization of your business. But how high up does maritime risk stand on that list? And does it give you that winning edge in the context of the topic of this panel?
How high is on the list? I would say if you just asked me a year ago or a year and a half ago, I would say number 3 or 4 or 5 or something like that, right? It was fuel efficiency, then market, and then what else we could come up with. But certainly the last year and a half, it has come up significantly on that list. And partly is that simply because we now have some opportunities we never had before. Simply looking up where's the ship's been, where's the cargo been, and all that. And back to the point that we commercially control 500 vessels every day. We cannot sit and look up every single vessel. We cannot say to someone, hey, you need to do this and check this cargo and check that. We need it to be seamlessly integrated into what else is in front of the charters. So in our operation systems, we need to have all the ships in there and saying this ship is okay, this ship is not okay. So again, access to data, that is the first part, but it's only the first part. Integrating it and making it kind of available for the decisions makers in a fast way is fairly key. So there's a lot of work in front of us in getting the kind of the sanctions approvals and all that into the efficient screens of the charters.
With regard to adopting analytics for winning edge, we can really see some key themes here coming back, which are infrastructure and agility as well when it comes to using that data. From a shipbroker's point of view, Henry, shipbrokers are really market experts. It's upon them that a lot of players rely for their expertise. Is there more demand for them to now be very well versed on maritime risk and this, let's say, more public aspect of the market?
Well, I suppose I mean, define maritime risk. If it's financial risk, if it's the risk of buying too high or selling too low, then on a short-term basis, yes, that's very much the shipbroker's role, or a spot broker's role. A time charter broker might be slightly more interested in a 6 months to 3-5 year time horizon. I think it would be sort of over-generous to say that every shipbroker has fully grasped the potential of data analytics. I mean, some of them have, and some of them are using it very effectively. There's still an element of old school broking, certainly, that exists. Some divisions, some desks, for instance, our derivatives desk is very up to date with using technology to add value. In terms of, again, my role and my team's role to advise clients on the timing of entering or exiting time charters, paper positions, or buying and selling assets, there are elements that data, good data analytics does support. I mean, just as an example, I'm able to look today at the relationship between oil in transit and oil on the water, which is not something, I could have done it before, but it would have been a bit of a slog. And I can tell clients that we've still got some way to go before, even oil in transit going up wouldn't support the market, because we've got a lot of oil on floating storage that still needs to come off. That's the sort of advice we're able to give using data analytics to make people hesitate about the bottom of the market, for instance. One of the difficulties, and obviously the holy grail in all of this process, is you're looking for forward indicators. You're looking at how to use all this data that you've got to try and give some predictive element. Yes, there's a timing element to it. You might find out before your competition that something has happened that might move the market. But what you really want is something that might indicate what will happen. And that's been the struggle. I mean, every company I've talked to who's been involved in big data from a shipping perspective has struggled to find lead market indicators. It's all a question of better understanding of what has moved the market, back testing to see the influence of elements in the past. That's certainly of value. So it's certainly a way of creating better understanding and reducing the sort of knee-jerk element of decisions. Whether that makes it a less risky business, I don't know.
Talking about a forward-looking view, a lot of companies have started to address the elephant in the boardroom over the last couple of years, which is climate change. And the shipping industry has been in the spotlight with the recent IMO regulations. Not later than last week was the Marine Environment Protection Committee of the IMO meeting to agree a new draft of mandatory measures designed to reduce greenhouse gas emissions. Two things that really came out from this meeting was the confirmation of that goal of a 40% reduction in 2030 compared to 2008 levels, as well as a new A to E rating system to incentivize ship owners. Which leads me to my final question for this panel. How can data analytics capabilities help the industry's drive towards decarbonization? And I'm not saying that the focus should solely be on the ship owners, but I will start with you, Morten, as I'm sure it's something you think about often.
Sure. As I've mentioned, I mean, fuel efficiency has been the key driver of our dive into data and analytics for a while, and still is. So I certainly think there's a massive role to play in finding the right speed, finding out when to arrive somewhere, finding out if we should clean the hull or clean the propeller, all that we spend a lot of time on. Having said that, I'm not sure it is data that's going to kind of create the big leap forward that we need to get to where we want to be in 2030 or 2040. That is not for me about monitoring ships or how they do it. That's about technology. We need shipyards, ship owners, ship designers to come together and find the right solution for alternative fuels on shipping. We can talk all we want about incentives and all that, and I think it's important. But I actually think right now we have a technology challenge. People are not ordering ships because we don't know what we should fuel them with. We're all standing there saying, okay, we'll probably know in 5 or 6 years, so let's wait a little bit. And I think that's certainly what's going on. So I think data is hugely important in optimizing what is already out there and getting the most out of it and getting some more information. But the big leap forward is a good old-fashioned technology invention I think we need to drive.
That echoes the drive of the International Chamber of Shipping. That was echoing a report by Trafigura as well, talking about a bunker levy of about $2 per ton in order for the industry to fund its own research, because they acknowledged as well that it was going to happen only if the technology was there to make it happen. Henry, on the shipbroker side, is this a theme that comes up, decarbonization and the push towards chartering greener ships, or is it still very much a financial question?
Well, there aren't many greener ships around at the moment. I mean, the greenest we've got is LNG dual fuel. And so we're obviously very actively involved on the new building side in terms of persuading or dissuading in some instances, purchasing dual fuel vessels. The data side as Morten says, it's a question of tweaking and optimizing. You know, anything that creates greater efficiency will be beneficial for fuel consumption. But again, you're playing at the margins there. I would absolutely agree with Morten that it's got to be a real step change in technology. So you know, we're very involved in you know, supporting and persuading and encouraging this change. We're regularly writing on developments with respect to sort of regulatory frameworks. We're certainly pushing the IMO very hard in our capacity as shipbrokers to take decisive action and to take action fast. Because of course the threat if the IMO doesn't take action is that it will be on a unilateral basis, whether that's Europe first presumably or quickly followed by the US taking their own steps to tax carbon, which will be very difficult to police and I think a little bit counterproductive. So in as much as we can in the conversations we have, we're actively persuading this, you know, encouraging this change, but we're pretty limited in our ability beyond telling people to order the most fuel efficient ships, or whether it's dual fuel. Ammonia, hydrogen are still some way off, so there's not many decisions to be taken today on that front.
There needs to be a global regulatory alignment, that's for sure, as the industry is extremely global. Ron, what are your thoughts on this question?
So we're being pushed at the moment by large energy customers in particular. So large ship owners, large energy customers, to try and come up with a more dynamic building block. We think about things in terms of building blocks because we basically add them to various models in order to come out with, you know, new insights, new abilities to be able to predict what's going to happen next. So one example of that is CO2 intensity. So we're working with different partners on that in terms of, you know, having one standard global measure that changes over time. So it's not just based on the, you know, the blueprint design of the ship at the yard. It's what it's doing now, 15 years later or whatever. And working with owners and energy businesses in order to be able to, you know, come up with a new standard which reflects what the IMO is asking for, because I think one of the big issues is about trying to stay ahead of these things as they are issued. So it gets issued last week. It's always ship owners who have to bear the brunt of the cost. So it's trying to find a way of being able to, you know, bridge that and make it manageable and still make sure that the fleet is able to be chartered.
It will absolutely take a team effort, so to say, from the charterers, from the owners, from the brokers, and new data analytics companies such as Windward and Vortexa operating within the industry as well. Thank you very much for your answers on these 4 questions. We're now going to see if there are any questions from the audience and switch to the live Q&A part of this panel. One question for the panel. In which area do you see the most disruptive potential for data analytics within freight? Who would like to be the first one to take that one?
I can start if you like.
Go ahead, Ron.
I mean, just in terms of what I've seen in the last while, I think a lot of people are talking about digitizing old processes. And I think the biggest leap is going to be around digitalizing rather than digitizing. So digitalizing meaning, you know, a bit of a leap in terms of focusing on the outcome that people are trying to get to and then solving for that rather than, you know, digitizing what's, you know, the way we've done things for a long time. I think that's the single biggest leap, and using new building blocks like behavioral. So the behavior of ships, which I've been in shipping for 27 years, and I didn't realize behavior of ships was a thing until about 2 years ago. And now I realize that there's quite a lot of leaps that you can make using that.
Thank you for your answer. What are your thoughts, Morten?
Well, a big disruption. I think we're going through a couple, but where some places where I'm still a little bit surprised on where we are is all the paperwork that exists in this industry. It's mind-blowing how we still do CPs, recaps, and everything like that. I think there's still some way to go there, also on the whole bill of lading and all that. I mean, the pure operations side, I still think we have some way to go. Where is it a disruption? I don't know, but there's certainly things that needs to happen at some point. But it is going fairly slow. Someone always mentions blockchain at this point in time, but I still haven't quite seen the full potential. So let's see. Let them start in containers, and then we'll see where we get from there.
Last but not least, over to you, Henry.
Well, I suppose it should mention the potential impact of cybersecurity as a negative disruptor, obviously, as a result of this great shift to technology. And obviously, a lot of work being done on that front, but it's sort of an unbalanced between companies how they apply this security. So there are still some very serious risks as we move to interconnectivity and digitalization. So yeah, I'd say that's a potential negative disruptor that we will have to be aware of.
So here you're bringing the question of technology being also used as a mechanism of defense. We've seen, I think it was off the coast of China, a bulker going around in circles without realizing it as well. And this is where companies such as Windward can come in as well. Maybe not only to explain dark activity, but highlight areas where cybersecurity can be an issue. We don't have any more questions in the live Q&A, so I wanted to thank you all for a very insightful discussion and for your time. I wanted to thank our partners at Enterprise Singapore as well for having all of us here this year. And we already look forward to the next.
Great. Thanks very much.
Thank you. Bye, everyone.
Cheers. Thank you.
Yeah, thank you. Thanks to the team at Vortexa for organizing this panel discussion. So right now we will have a short break before we commence the next live presentation by Stanley at 4:45.